Hi, I'm Jonathan York Bay Financial Partners, looking at investment markets. Another pretty interesting week for the Trump administration. The sort of very uncertain sort of trade policy that he appears to be sort of following has now thrown Venezuela into the mix. Because up until now, it's just been talking about tariffs, obviously in Europe, China, Mexico, and Canada. But now apparently any country buying oil from Venezuela, because of the supposed gangs that they're sending over the border, they will see a 25% tariff placed on their goods. You know, it was just this sort of very uncertain sort of trade policy that left the Fed to leave rates unchanged. And that sort of brought them in direct conflict with Trump, who came out, very quickly and said the Fed should be cutting interest rates to help the US economy transition over the tariff period. Now, in an indirect way, that's sort of an admission that there will be some pain out there for the US consumer, because tariffs are a tax on the consumer. They are not paid by the country that exports the goods; they are paid by the company that imports the goods into the US. And that company then has the option of obviously absorbing the costs or passing them on to the consumer. And if they're passed on to the consumer, it is a tax on that consumer because prices will rise. So against this backdrop, potentially you've got a slowing US economy. The Fed did reduce its GDP forecast, but also as well, the latest employment data was showing fewer jobs are created as well. And that was really before the Doge and Elon Musk started to lay people off left, right and center. So on the back of that, US rates have sort of moved just up a little bit. 10-year is currently around 4.30, 2 years above 4% at 4.03. But as we head into the earnings season, it'll be very interesting to see what sort of guidance major corporations give in the US, because at the present it's looking like we have got a slowing economy. Now, the Fed cut their GDP forecast to 1.7% from 2.2%. Now, again, in further embarrassment to the Trump administration, it looks like a journalist was read into a chat group on the attacks on the Houthi rebels in Yemen. Now, they're scrambling to try and cover themselves and say that no, secret information was given or sensitive information. But when the various agencies appeared before the congressional committees, they certainly towed the company line and said that no sensitive information was released to the journalist. But apparently they couldn't provide any copy of the texts that were sent. Which led the committee to say, well, if there was no sensitive information, why can't we provide a copy of that information? So certainly it could be very interesting next sort of couple of weeks because, potentially the tariffs start to kick in early April. Although again, on an apparent sort of flip-flop that, Trump came out last weekend and said, actually, potentially there is some sort of flexibility on the tariffs. So it will be very interesting to see how the US economy sort of performs over the next sort of couple of months. We've got earnings season coming up, and it'll be interesting to see the guidance going forward for some of the major corporates. Because at present it does seem some very uncertain times for the US economy. Now, potentially there is some good news on the Ukraine-Russian war, that they have agreed to a sort of a partial ceasefire on certain items. though whether Russia abides by that ceasefire is another matter. Now in Gaza, the ceasefire there is sort of broken down completely, and it appears that Israel is back on the offensive in a major way. Now oil has slipped back below $70, currently sort of 68.80 and change. It's come up a little bit from the recent lows, but again, it's sort of quite interesting because Trump's policy of drill baby drill for the US oil companies is potentially now about to hit a bit of a speed bump, because with prices falling, the oil companies are saying, well, actually, it's not profitable for us to extract further oil, and we may be looking at shutting down plants rather than opening up new ones. And if that is the case, that will be another major embarrassment for the Trump administration. Now in the UK, the Bank of England decided to leave rates unchanged and sort of a wait and see policy, really waiting to see what impact potential tariffs from the US might have on the UK economy. And that's a similar story from the EU region as well, because despite the ECB cutting rates at its last meeting, it's very uncertain what will happen with the EU economies and potential tariffs going forward over the next sort of 3 to 6 months. Now in Australia, after the Reserve Bank did cut rates at its last meeting, but potentially gave a sort of a hawkish sort of commentary with it, the latest employment data was a little bit on the weak side, and potentially now that does open the door for a further rate cut in May. Also as well, we've got the Australian election as well, which will be very interesting to see how that plays out. Because at present it looks like Albanese will be unlikely to form another government. Now here in New Zealand, obviously good news on the latest GDP data, that was plus 0.7, so potentially New Zealand is out of the technical recession. But on a year-on-year basis, GDP was still down around 0.4%. But again, there are encouraging signs out there for the New Zealand economy. We've still got the latest rate cuts to sort of really filter through the economy. You've certainly got some pretty decent spending out there from tourists over the summer months. The dairy sector will see a pretty decent payout, and that will put more money into the New Zealand economy. But having said that, the Reserve Bank meeting on April the 9th is still expected to cut rates further. Just a question whether it will be 25 or 50 basis points. Now, if it is 50, that will take the OCR down to 3.25. with potentially another rate cut coming in the next sort of couple of meetings. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.